Hey everyone, welcome back to Corporate Decoder, the place where we unlock the secrets behind Wall Street's biggest moves. But before we dive in, make sure you hop over to our Discord server linked in the description. It is where the real money talk happens, and you do not want to miss out on that. Today, we are dissecting a rather interesting report from Viavi Solutions Incorporated. Now, this isn't just any filing, it is a signal that a big deal has gone down and the company is now financially tied to it. So what happened on the 16th of October 2025? Well, Viavi Solutions Incorporated, or Viavi as you might see it on the ticker, officially closed a deal to buy a hefty chunk of business from Keysight Technologies Incorporated. This isn't just any business. We are talking about Spirent Communications, PLC, S-High, Speed Ethernet, Network Security, and Channel Emulation Testing Division. Think of it as buying the specialized tools that help build and test the fastest and most robust networks out there. To pay for this big acquisition, Viavi didn't just dip into its savings account. Oh no, they went and snagged a massive $600 million loan. This isn't just any loan either. It is a senior secured term loan, meaning it is backed by pretty much all of the company, assets, and those of its domestic subsidiaries. This loan wraps up on the 16th of October 2032, giving them a good chunk of time to pay it back. Now, how much does this loan cost them in interest? It is tied to something called term SOFR, which is like a benchmark interest rate, plus extra fees depending on Viavi's financial health. If their first lien leverage ratio, which is basically how much debt they have compared to their assets, is high, they'll pay a margin of 2.50%. If it is lower, that drops to 2.25%. There is also an alternative rate based on a base rate plus an extra 1.50% or 1.25%. Again, depending on that leverage ratio. Every 3 months starting the 31st of March 2026, Viavi will start paying back 1% of the loan. As total amount, they can also pay it back early if they want, but there is a catch. If they pay it back within 6 months of getting the loan, especially to refinance it at a better rate, they'll have to shell out an extra 1.00% as a prepayment penalty. Think of it as a fee for early repayment to lock in a better deal. This loan comes with strings attached, as most big loans do. Viavi can't just go and borrow more money freely, or take on risky investments, or sell off key assets without checking with the lenders. They also have to avoid any major fundamental changes to their business structure without getting a nod from the bank. It is all about making sure Viavi stays in a good position to repay this massive sum. But wait, there is more. On the same day Viavi wasn't done making financial tweaks, they also made an adjustment to their existing revolving credit agreement. Think of this as a flexible line of credit. They actually reduced the total amount available on this line, knocking it down from $300 million to $200 million. And they extended the deadline for when this credit line needs to be fully paid back to the 16th of October 2030, or it could be pulled earlier if certain other company debts get too close to their maturity date. To top it all off, Viavi released a press announcement on the 16th of October 2025 to let everyone know about this acquisition completion. Now, let's look at this from a bird's eye view. Viavi Solutions Incorporated is clearly making a bold move to expand its capabilities, especially in the crucial areas of high-speed networking and security. Taking on $600 million in debt is a significant financial commitment. It shows a strong belief in the acquired business, as potential to generate enough revenue and profit to service, and eventually repay this debt. The company is betting big on growth driven by these new assets. The decision to secure a term loan instead of relying solely on equity financing suggests they might believe their stock is undervalued, or they want to avoid diluting existing shareholders. However, the restrictive covenants associated with this loan are important to watch. They can limit Viavi's flexibility in future strategic decisions, like making further acquisitions or significant investments. Also, the reduced revolving credit facility indicates they might be shifting their short-term financing strategy, perhaps anticipating that the new business will bring in stable cash flows to cover day-to-day needs, or they are strategically rebalancing their debt structure. The risks here are clear. If the acquired business does not perform as expected, or if the overall market for network testing equipment slows down, Viavi could find itself under pressure to meet its debt obligations. Interest rate fluctuations could also impact the cost of their debt, although the capped margins provide some predictability. On the flip side, the opportunity is substantial. If Viavi can successfully integrate these new business lines and capitalize on the growing demand for advanced network solutions, this acquisition could be a major catalyst for growth and profitability, justifying the hefty debt load. In conclusion, Viavi Solutions Incorporated is undertaking a significant strategic maneuver backed by substantial debt. It is a high-stakes play that signals ambition, but it also carries considerable financial risk. Investors will be watching closely to see if Viavi can successfully navigate these new financial obligations and unlock the full potential of its expanded business. Alright, that is our breakdown of Viavi Solutions Incorporated. S latest filing, what is your take on these numbers and what they signal for the company? S future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.